Welcome to our four-part series on captives. We will be launching a new video every quarter this year on a different aspect of captives to help fully educate everyone on a new service we are offering at Reinheimer Baker. Today's video focuses on defining what is a captive and what the benefits are for a small business. Since this is a pre-recorded video, if you have any questions while watching, please email us at accounting@reinheimerbaker.com. This email address will also be on the last slide of this presentation. So let's review our agenda for today. What is a captive? The benefits for a small company, and then how to get started with your own captive. Before the benefits can be discussed, let's talk about what a captive actually is. It is an insurance plan that is owned by the company with the primary objective to lower the company's total risk and financial cost. To break it down, a company creates their own insurance company to purchase their premiums from, instead of having to go through brokers at 3 to 5 different firms, depending on how many different types of insurance they provide. This helps ultimately lowering risk because the premiums they pay are put in a reserve versus into a totally different company that they have no control over. Now that you know exactly what a captive is, let's discuss the benefits a company gains once they create a captive. The first and highly motivating benefits is being able to save and manage your costs more effectively. Through a captive, you eliminate and reduce costs such as commissions, taxes, risk changes, administrative work, and underwriting. Ultimately, this reduces the premium payment that you pay to your captive and also allows you to decide how much is kept in the captive and how much is kept in the company. Pricing stability is also a highly coveted benefit, as your captive gives you the control over premiums and you aren't subject to the market's ups and downs. The third one on this page is increased cash flow. An increase in cash flow is created through your premiums, claims, and reserves. A captive creates a reserve that allows for additional cash flow that wasn't accessible from an outside insurance company. From the first three mentioned benefits, the next one can be easily guessed, but it is increased control. Ultimately, having your own captive gives you the control on coverage, pricing, risk management, and more than typical when working with an outside company. You also gain access of your claims process, which helps improve the spend in which your employees can submit and receive payments. You not only gain better control, but you also improve your total risk management by centralizing the risk control to the captive versus multiple insurance companies. You also gain the ability to implement appropriate stop-loss reinsurance to manage peak risk. Additionally, you can use investment income to fund losses under your captive. With the premiums your company is paying being set aside within the captive through the reserve, the extra that isn't being used to pay for losses or claims can be invested, which helps grow the amount of money you have for larger claims in the future. The captive also helps with your company's total tax strategy. Since you set up the premiums paid to your captive and the premiums are paid are tax deductible for your company, you get to determine how much that tax deduction is. And any losses the captive experiences also give you the ability to get deferred taxes. So now that we've talked about all the great benefits that a company gets from a captive, how do you get started with your own captive? Well, since this is a new service we're offering at Reinheimer Baker, contact our team. We currently offer a concierge service to get it started and also an outsourced service to maintain the financial end of your captive, basically making it employee-free for you. You can contact us at accounting@reinheimerbaker.com. Thank you for attending today, and we look forward to you watching the next video next quarter.